China-focused gas group Green Dragon has increased its two highest categories of commercially recoverable reserves for the 10th year running. Chairman Randy Grewal joins me now. Hello there. Now, I expect you're pleased with the latest assessment. How have you managed to keep up the pace 10 years in a row?
I guess when you've done something for 20 years and 10 years consistently as a public company, you get pretty good at it. But we've been very much focused on the ground, further reducing our finding and development cost, being very focused and diligent on the drilling techniques that we've developed over the last decade. And it's that F&D reduction along with the drilling diligence that obviously accretes incremental values in proven reserves. And we've clearly done that for 10 consecutive years.
So talk me through the numbers and what they mean for the company's growth.
Well, I mean, we showed today, and these are, again, I will emphasize audited reserves. So this is not just the company's view, but our auditor's view as well. Our 1P reserves increased by 17% year on year, 14 over 2015 year end to 173 BCF, and our 2P 29%, as much as almost 30% to 550 odd BCF compared to 427 BCF last year. What that essentially means is that the continued success of our 2,000 odd wells that have been drilled across our acreage and their continued sustainable production, if you can imagine, these reserve numbers are increased net of actual produced volumes of 2014. So when you think about that, it's a significant increase because they include the gas that has been produced, if you will, and that gets compounded in these numbers.
But while the amounts have risen, the value of the reserves has dipped, hasn't it? Is that purely because of currency issues?
Yeah, predominantly due to currency issues, that's correct. I mean, we want to emphasize that during our investment years over the last 20 years and certainly 10 years as a public company, we were investing US dollars at an exchange rate of almost 8.27 RMB. And the fact that we have a bit of a dip in this year, it's still, we have significant gain built into our currency exchange rate between the dollars and the RMB. But yes, in 2015, there is a bit of a PV or a present value dip, but still significant numbers compared to where we are as a market cap.
Now, you have various partnerships and you've also made some big investments to get to this point. What in particular do you think has helped shape the business?
Consistency and perseverance. I mean, we've been very focused on the technical success on the ground. And it's that technical success that paves the way for closer partnerships with our large Chinese partners, PetroChina, CNPC, and CNOOC. But it is that recognition that we are technically successful on the ground to produce sustainable gas from these complex coal beds. I think it's the secret to where we are and our success over the last decade.
So that's where you are. That's what's happened in the last decade. What next? What's the plan going forward?
It's time to monetize a very long investment cycle. I mean, we are very focused at this point to monetize the returns, monetize the value for our very, very patient shareholders over the last decade. 2016 by far is going to be the best year that Green Dragon's ever had financially. And I think this is just the beginning of a hockey stick that we can now see going forward. I mean, if we were not to drill another well, our production, our revenue, our EBITDA, our cash flow will consistently compound based on the wells that has already been drilled successfully in the ground. So it's really, I mean, in simplistic words, it's time to monetize and get returns.
Time to monetize, time to get returns. But you have to have a look at the market that you're in and the challenges facing not just China, but the gas industry too. I mean, we've got the fall in prices, changing market conditions, also a bit of a shift in the competitive landscape. What do you think the short and long-term factors you find yourself thinking about are?
Well, Green Dragon gas is the bright spot in an otherwise a very dark, dismal commodity cycle. I mean, we are not impacted from the drop in commodity prices. I mean, ultimately, the Chinese government has been very smart and stable and consistent with this viewpoint that the weighted average delivered price for natural gas into China, specifically into Beijing, is passed through to a domestic producer. So today, without a question, Green Dragon Gas's net gas margins, or any domestic Chinese gas producer, their net margins far exceed anything else in the world. So yes, it's a tough market for many of my colleagues with the sharp decline that we've seen in the last 12 months. But fortunately, it has no impact to us, which is why I've been on record now for a couple of years saying that we are decoupled from Brent. While we are concerned about our colleagues, we certainly don't care about Brent when it comes to Green Dragon Gas because it doesn't affect us, and it certainly hasn't.
So it hasn't affected you, which is good news for your shareholders, and especially, as you said, 2016 is going to be all about financials, and you say it's going to be the best financial year yet. Well, look, it's been an absolute pleasure catching up with you, Randy. Thanks very much for the update.
Thank you for your time.